My name is Hamza Zaveri. I'm the co-founder of the AI Furnace, and I'm super excited to be hosting this panel on investing at the frontiers. Just to start off, investing in deep tech and AI has been a marginal thing for like 5 decades. People, a lot of investors weren't specifically, or not most investors weren't investing in AI and deep tech. It was very specific types of investors, and of course, over the past 3 years, that has changed completely. And now we have thousands of AI founders building AI companies around the world. And that's largely driven by the innovation in foundation models and large language models, especially around being able to evaluate large swaths of data and generate new content around that, which has unlocked a lot of new use cases. And around that, there will be a lot of value unlocking from there. And so investing in that area is very interesting, but it's also a long-term game because we're still very early. And so what I'm hoping to do with this panel is to dive deeper and to find out where is the real value in AI. And so I have a wonderful panel of guests with me, and I'll start with some introductions. We have with us Nihal Mehta, who is a founding general partner of Eniac Ventures. Before that, he was a serial entrepreneur, and then he became an investor. And Eniac Ventures is a seed stage fund that helps founders at the early stages reach product market fit. We also have with us Lisa Dolan, who's a managing director at Link Ventures, which is an early stage fund based out of Boston, which invests in AI and consumer companies. And we also have with us Marc Andrusko from Andreessen Horowitz. He's an investment partner there based out of New York, looking at B2B and a lot of finance companies. And so, yeah, we're going to have a very interesting panel, and thanks to all the panelists. So just to start off, Nihal, you've been a serial founder with successful exits, and you moved over to the investment side and invested in a lot of companies through Eniac. What excites you the most about the new generation of AI? And if you were back in the founder seat, in founder mode, what would you be excited about building in?
Great question. Thanks for having us, by the way. Amazing conference. I think it's interesting. I feel like I'm going to date myself, but I started my first startup in 1999. And it feels very similar to the first dot-com wave right now, because sky's the limit. Kind of every industry is being completely reimagined, and there's incredible disruption. So I know that's like a self-serving comment as an investor, but you can look at any single industry, any single vertical, and reimagine it with AI. And I think that's what's most exciting.
Awesome. And is there any particular sector or area that you'd be interested in building in if you were a founder?
Yeah, I mean, there's a lot of, it's interesting, right? You have all this investment you mentioned in the foundational models right now. But the top layers, the app layers, are still very unsaturated. So, what we always say is kind of what Uber did on top of kind of iOS and Android. They needed the mobile phone platform to create a massive company. What is the Uber for AI, right? So like, what are the consumer layer apps that are going to leverage OpenAI and Anthropic and Llama to change the world, right? And so I think if I was a founder right now, I'd be very excited about building consumer, for example.
Awesome. Okay, so why don't we dig into the app layer further? And Marc, I know you're looking a lot into AI in finance and AI in accounting, and you've written some interesting articles about that, one of which is Death, Taxes, and AI.
So my pieces start with death. It's like death, taxes, AI, death of a sales force.
Yeah. I was like, there's a theme there. And so, what are you most excited about in terms of innovation in the finance space? We're in New York City, which is the hub of AI. So that'll be an interesting one to dive into.
Yeah. Well, I think New York's the hub of everything. Hopefully everyone would agree with me. But yeah, look, I think as I think about the app layer broadly, and then I'll kind of dig into finance. I try to ground everything in some sort of like data. And one really interesting data study that this global organizational consulting firm called Korn Ferry put out basically says that by 2030, there will be a human talent shortfall of anywhere between 40 and 80 million people that could account for roughly $3 to $8 trillion of lost revenue. These are very wide ranges, but any way you slice it, those are really big numbers. And so as you think about like what is the AI app layer opportunity, it's basically we as founders and investors need to convert capital into AI native applications that can eventually do the jobs and the labor that this kind of shortfall represents. And so when you think about how big of an opportunity that is, you can start to drill down on like sub opportunities within it. So to revisit your question on finance, for instance, I think there are many financial services or just white collar professional services verticals that you could use an example. I like to pick on accounting because accounting has an even more urgent manifestation of the same sort of trend I just talked about, which is 75% of CPAs are set to retire within the next 10 years. And simultaneously, fewer students than ever are taking undergraduate and graduate courses in accounting. Meanwhile, client demand for accounting services is the same, if not growing. And so there's this real structural gap in being able to deliver the same services to this growing client base. And so AI can really, fill that gap, and it creates a really compelling why now for accounting firms to be clamoring to buy software. So I think like anyone on this stage or any investors in the room, we try to ground most of our investment theses and arguments around a why now. And I think those are really compelling. Obviously like AI platform shift is the why now for everything, but then looking for additional secular tailwinds in certain spaces, I think is really important.
Amazing. And when we think about accounting firms and the services industry, of course, that's a massive market, and it's pure knowledge workers and services, right? Like human, like labor. It's a labor market. And do you think that the new generation of AI will start eating into the labor market instead of the SaaS market? Because when you think about SaaS software, traditionally, you have to, an enterprise or a company has to buy SaaS software and then have a human run it. What do you think about actually AI eating into the labor market itself? And this is more for all of you.
Yeah, I can speak to that. So I invest in, as you mentioned, consumer companies, and what actually I'm most interested in is human-assisted AI, and really integrating into the user flow of that human's work. So you're really understanding how to automate their job without necessarily taking them out, but enabling them to be 10x, instead of a trite word, but 10x, 100x better in what they do really, really well, and then automate the work that is repetitive, right? So automate the accounting, automate the legal. If I had $1 for every AI accounting, AI legal company I saw, we would be doing quite well. And so I think that what I'm actually interested in, and I think you, Nihal mentioned it, is founders that who are working on verticalized applications, not the foundational models, but verticalized applications, are not just thinking about, okay, how can I get this up in a day? Because that's actually what you can do today, right? You can build a product, an app in a day. Where I see really the incredible opportunities, and let's use the analogy of Uber and that platform shift, is what it was Uber. It was an end-to-end car sharing, black car company, right? I'm actually not seeing a lot of those really, really, really ambitious founders focused on the verticalized applications. I focus on MIT and Harvard. I see at MIT, and we see a lot of foundational models. Very, very technical people. These are, initiatives that cost 100 million to fund. On the verticalized applications, however, I'm seeing things that can cost $1 million. Where I'm interested is actually to see those ambitious founders that are thinking about new end-to-end solutions. And most of them will, to the Uber analogy, will be amplifying the human who's in that industry.
Yeah, no, I was just going to say, like, to reiterate that, that's why I said this is kind of like the .com 1.0 moment where, like, brand new things can be imagined. And this is the time for founders to be, like, incredibly ambitious. And we're not really seeing that yet.
Yeah.
You know, we're not
Amazing.
seeing founders like, you know, TK from Uber or whoever, Brian Chesky from Airbnb that are really going big. We actually just yesterday agreed to invest in a company that we think is a very big consumer AI swing, but I think we're just at the beginning. I think the next couple of years is going to be incredibly interesting because everybody can build and ship an AI company in a weekend.
Yeah.
You can use open source off-the-shelf tools. So there's no excuses.
For sure. And yeah, just a note to the founders, bigger visions is what is needed at the moment for the founders in the audience. And, you know, digging further into that, what can differentiate someone when they're, you know, providing you with a big vision and they're pitching you? Is it really related to founder market fit? And also, when you're going for a consumer use case, the acquisition channels are very different to B2B. What kind of traction would you be looking at?
I'm happy to start from the B2B perspective, and then we'll let these guys chime in on consumer. Yeah, look, you mentioned founder market fit. I think we typically, when we're meeting with early stage teams building in B2B, we look for either, or ideally both, an earned insight around product and an earned insight around distribution. An earned insight can be a bit of a trite phrase, so like, what does that actually mean? Typically that means that you discovered something in one of two ways. The first and most obvious way would be through like prior professional and or academic experience. And so an example of that might be like, you were on a team at reputable company X, your team was tasked with solving a very specific problem. By virtue of going very deep to solve that problem at your last job, you know more about it than anyone, and you kind of realized, oh, this problem is probably felt by many of our peers and many companies in the world, and therefore constitutes a standalone business opportunity, and I'm going to go be the person to build that because I understand it better than anyone. That's like a great founder market fit story and something that you would look for in a team, not just in the AI native era, but in general in B2B software. The other, and potentially less obvious, but equally compelling in some cases, is like someone who just has such insatiable curiosity that they've attained what we refer to as encyclopedic knowledge about a category. And encyclopedic knowledge is, again, a little bit of a squishy term, but what it means is like, you know everything about the incumbents. You know where the chinks in their armor might be. You know where they have really defensible moats. You know everything about the graveyard of startups that have tried to build this exact thing before and why they failed. You've talked to like the grandfather or grandmother of the industry. You somehow got in front of them and you learned like everything about it. And I think these are things that like sort of prove founder market fit as opposed to just the logos on your resume. And then the last thing I'll say, again, specific to B2B, and now we'll ground it a little bit more in this like AI time, is we see a lot of teams that are either, like, let's pick on the vertical software for professional services, either legal or accounting or anything like that. We see a lot of teams that are either like deep domain experts, but haven't really built software before. So like they're coming from 10 to 15 years in accounting and they know everything about how accounting firms buy software and feel pain points and everything, but they haven't yet really like shipped software products. Or you see teams that are incredibly talented, you know, Silicon Valley type engineers who understand that there's a big opportunity in accounting, but like have never spent a day in an accounting firm. And for whatever reason, it's been rarer to find founding teams that kind of have both, which I think is the most obvious recipe right now. So I think it's just balancing those two things of like really understanding the domain, but then also really understanding how to ship software with high velocity.
Yeah, that's really interesting because we've seen through building up the AI furnace and the community for over a year in both Boston and New York that Boston has a lot of really good technical talent and New York has a lot of really good business talent. So you guys just need to like go over to each other's like cities and just like connect with each other. I think that would be a good way of connecting the co-founders. But yeah, Lisa, you were gonna.
Yeah, I was going to say I can't agree more. I actually like the term earned insight, but also not spending time with investors, like to the point of you can create something over a weekend and just getting a knowledge base that could be like an encyclopedia. I think that it's about really just focusing on the customer, just like really getting to know that customer inside and out, and not focusing on investors. And then come to investors and prove yourselves with traction. I think is a horrible, also trite word in the VC world, and it's not about the user. It's not about retention. It's not about revenue. It's really about you understanding your customer in such depth, and the macro environment and the competitors, and then you actually are underwriting the investment for yourselves. Like all of you guys, right now, and as I said, I invest in a lot of MIT and Harvard. Like your time is so valuable after school. Why not go into consulting or private equity? The probability weighted return is actually probably a little better. So I think that you really underwriting the market opportunity and the company for yourself is what is really compelling, and then go to investors.
Sure. And Lisa, just carrying on from there, there is a lot of value creation potentially up for grabs here, which is being competed for by startups, and then we have big incumbents from industries, and then we have big tech. Who do you think is going to win in that space? And as a startup, how can what advantage do you have in that world?
Yeah. I think it's an interesting time, and I do agree with the 99.com analogy. And actually, on the venture side, we ultimately are seeing now Microsoft and large funds, mega funds, go into the space and run up the valuations with huge check sizes. And so I think as a startup, you either can get that large check and build a foundational model, or focus on really understanding your customer and actually perhaps not even raising that much money, and building wealth for yourself. I think it's really a decision based on where you are. And I think I asked myself that too, right? There's going to be a complete platform shift in 5 years. Where should we as a venture investor be investing? Where should my LPs be investing? And where should you as an individual be investing? I think be building. And I think it's really based on what you can do that is 10x better than anybody else. I'm actually quite interested in flyover state, I'll call it, flyover state opportunities. So not the opportunities that are clear in New York and the Bay Area and Boston. So not necessarily amplifying, white collar work that's in that, but manufacturing, mining, like large industries that was just a teeny change to productivity would be such a big opportunity. And I'm seeing less of that. I'm seeing a lot of the same things, just printed out. I think that if there was sort of the point of Boston, New York, if there was, really strong tech talent going into, the mid-market and understanding how to automate a mine, or automate a manufacturing facility, or automate, supply chain. So that's where I would be interested.
Yeah, I totally agree. We think the sexiest industries are the most unsexy.
Yeah.
And raise your hand if you know what a fax machine is. All right, a lot of people. We look for industries that are still using fax machines because, by the way, there's a ton. There's probably maybe a few $1 trillion of GDP that still uses fax machines. Those are perfect for AI disruption. So as a founder looking for a B2B business, go find some fax machines. But for example, one of our best companies is a marketplace for excess inventory, a company called Ghost. And literally this business is still powered by fax machines, right? And so what businesses used to be basically digitized are now further accelerated with AI. And those are incredible businesses. Yesterday we heard a pitch for, a supply chain for HVAC parts. Yep. And I was like, is there a fax machine in the mix? And Kristen was like, yeah, there's a fax machine. Let's do it, let's go. We're going big. We found a fax machine. So it's interesting, right? And I think it's kind of like a nice low-hanging fruit for what's happening.
Awesome. And as a VC, one of the key skills is being able to assess founders, because ideating on the future is tough. And we touched on hustle and encyclopedic knowledge being one of the things. We touched on and insight being one of the things. Is there anything else you think is very helpful to have as a founder when you're assessing founders?
Yeah, I can speak to this. So we actually have a sort of rubric in our fund. And whether you're a single founder, actually I was just speaking to a couple founders yesterday in Toronto asking me, is it better to be a co-founder or to be a single founder? And this is a topic that has been very well discussed. And he was a single founder. And you don't want to try to find a co-founder sort of with technology searching for a problem analogy, right? You're not trying to find something just to fit the VC mantra we're investing in co-founders. And if we look at some of the outsized successes, there are single founders. That said, what we do look for is a magnetic person who can really, really be amazing at recruiting. So yes, this is a fundraising game, but being able to recruit the right talent and inspire them to get behind your mission. And as I said, like going into private equity is probably a better probability way to return. You need to get people on board on that founding team that are gonna be there for the ups and downs. There is a ton of work in startups, and finding that that founding team, I think, is super, super challenging. So having that magnetic ability to inspire others to believe in your mission like it's their own is one core trait that I really focus on. And then, of course, we do focus on technical talent, but we also have non-technical talent that's actually been a producer of some of our strongest returns. So for me, it's more about being really, really good at recruiting. So,
yeah, I actually just posted about this. Like, could you see yourself working for the founder?
Yes.
Is like a signal that we think about a lot. Also, I think building a startup is incredibly hard, right? You're doing the impossible, and so having a person at your side to cry on their shoulders and to celebrate the wins with is incredibly important. And so we invest in a lot of solo founders, but our best performing teams have actually had multiple co-founders, and they actually worked together before at a previous startup that usually failed. So it's an interesting kind of pattern match. This is over kind of 15 years of data since we started the firm. But if you're going to fail together with somebody else and you've had your hands around each other's necks and you want to do it over again, that means the world. One of the biggest reasons of early startup death is lack of co-founder chemistry. And so if you can de-risk that, then you're on your way.
Yeah, the only thing I'd add, it's funny, we use the same word magnetism a lot when we talk about founders. And obviously, recruiting is a big part of that. But I think the other two dimensions are, it kind of correlates to how well you can fundraise and how well you can find your first 5 customers or just sell generally. And I think there's this like interesting belief in venture that is, the best place to be is non-consensus right, which sounds like a fun thing to say, but the best thing to be is probably consensus right, because if you're the only one that knows that like this is the team to do it, and you're the genius that figured that out, like if the rest of the market can't see that and isn't going to do the next round, then the company may not be default alive. So just an interesting framing to think about.
Awesome. A bit of a contrarian view. So the last question that we have is actually a hot take question. It's about, where is the hidden value in AI, which is very relevant for the panel. But, when you're looking at investing in AI, there are various different layers that we could think about. The app layer, the foundation layer. There's also data centers, the supply chain for data centers, various different things. What specifically do you think will be the area for value creation that might be underlooked or a bit more contrarian?
We just spoke about this before the panel. So conferences, you're in the right spot.
We can talk after.
Right. Picks and shovels to any industry that's growing by leaps and bounds are always a good place to build and invest in. So I joke about conferences, but I think you're in the right place. Obviously GPUs, right? The arms dealers. We like ad tech and marketing tech. That's kind of also where I built my previous startups. But I feel like with these big platform shifts, there's going to be more need for monetization. And we're seeing a lot of these old school MarTech and ad tech entrepreneurs, a lot of which built in New York over the past couple decades, coming back and building an AI.
It's kind of funny. I was going to say, this was sort of prepared. It was monetization. So all the founders I speak to are focused more on, seat-based pricing and a type of pricing model that's very common to software. But very few are actually thinking about what will be the monetization model in the next 5 to 10 years. And actually how to make money, because they're all going to VC for fundraising and thinking about getting the data moat, which is important, getting the awesome UI UX in order to get the data moat, which is important, but ultimately really understanding, to my point earlier, of understanding your customer also will inform your pricing. So really understanding where is the value creation that is in that industry. I spoke to a founder yesterday that was trying to apply AI to the construction industry. And I was trying to have him share with me, okay, what's the time that it takes to get a permit? And then what's the cost in that? And what's the cost of those stakeholders that are all involved in the construction process? Really understanding the value that you're unlocking and then thinking about the pricing models. Because right now what I'm seeing is seat-based pricing, volume-based pricing, things that would make sense. But really, I think that that's something that very few founders are thinking about, is like, what is the monetization model that's ideal for that customer?
Yeah. Well, as an application layer focused investor, I have to say apps. But I'll tell you why. And when we've kind of talked about this throughout a bit, but like many of you, I'm sure I'm a loyal listener of Invest Like the Best. And Gavin Baker was on there recently, and he mentioned this really interesting stat that I guess he discussed with Chase Coleman from Tiger, which is the launch of ChatGPT in 2022 was to the AI native application layer as the launch of Netscape Navigator was to the internet in 1994. And what's interesting is only 1% of current global internet market cap companies were founded in the 2 years after the launch of Netscape. So what does that tell you? It tells you that a lot of the most valuable internet companies were actually launched like 5, 6, 10 years after. And it just goes to show how early we still are in the AI app wave, with ChatGPT only being 2 years ago. So I thought that's one really interesting way to contextualize like where we are in the sort of platform shift cycle. The other sort of more like quantitative way to think about it is Morgan Stanley had put out this report called Gen AI and Privates or something like that around 9 months ago. And so it's already definitely stale because of the pace at which things are moving in this ecosystem. But directionally at the time, foundation model companies had raised roughly 2 times the amount of venture capital as application-focused companies, and they had done so at an aggregate valuation of something like 2.5 times more. But interestingly, in their study, they found that 67% of employees working in private Gen AI companies were working on apps companies. So what does that tell you? Like, people bet their careers with their time, and presumably like your time is your biggest opportunity cost. So it just shows that there's a lot of people with a lot of conviction that apps companies will create a lot of value.
Thanks so much. Let's give it up for the speakers.
Thanks for having us.
Thanks for having us, yeah.
Thank you.